Oil prices broadly flat after falling on dollar surge.
Forex Live European FX News Wrap. Dollar ramps higher as post-election run continues.
ECB accounts. It is still too early to declare victory in the fight against inflation.
Eurozone GDP growth confirmed at 0.4%. Employment rises. Slovakia GDP growth slows to 1.2%. Euro US dollar price forecast bouncing from fresh 2024 lows, sellers still at the driver's seat. Euro Swiss franc price forecast probing base of triangle as price attempts to break out. Gold declined 7.0% in November so far. Russia's central bank reserves, the dollar, declined to 620.8 BOs from previous 632.7 B.
Mexican peso weakens further after Republicans take Congress. Dollar marches on. Trump trade momentum undimmed. Election results are weighing on gold, but not on Bitcoin. Strategist explains why. BOE's man argues for holding rates firmly until more evidence of diminished inflation.
Wall Street set to open moderately up. Fed's Kugler welcomes easing in inflation expectations.
Euro Australian dollar consolidates near 1.6300 despite soft Aussie employment data.
Bit mining invests and prospers native tokens to support new focus on Bitcoin mining. Australian dollar falls after jobs report.
United States Producer Price Index ex Food and Energy, year over year, registered at 3.1% above expectations, 3% in October. United States Producer Price Index, MOM, in line with expectations, 0.2% in October. United States initial jobless claims below forecasts, 223K, in November 8th. Actual, 217K. United States continuing jobless claims below expectations, 1.88 MEM, in November 1st. Actual, 1.873 AMers.
U.S. dollar, Swiss franc price. Prediction breaks above 200-day SMA and continues higher.
Intuitive Machines stock skyrockets as Q3 revenue more than triples and NASA fuels record backlog. U.S. headline producer prices rose by 2.4% year over year in October. U.S. initial jobless claims rose to 217K last week. Crude oil under pressure after monthly IEA report.
U.S. producer prices increase in line with estimates in October. U.S. weekly jobless claims unexpectedly edge lower. Euro US dollar refreshes annual lows on Trump's clean sweep. Global oil markets face hefty supply glut in 2025, IEA. Iran tells IEA chief it will negotiate but not under pressure. U.S. dollar hovers between fresh year-to-date and one-year high after red sweep gets confirmed.
U.S. stocks may extend yesterday's lackluster performance in early trading. Stock market. Today, earnings drive. Disney up, Cisco down, S&P 500, NASDAQ await Fed signals.
Gold clock 7.0% decline in November so far.
Pound sterling refreshes 4-month low as Trump trades continue to outperform.
UBS raises US dollar yen forecast, says another jump to 160 is possible. Bank of England man favors keeping rates on hold. U.S. equity futures flat. Eyes on Disney. All right, let's go, 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 go. Welcome to Forex.Today, the YouTube community of more than 21,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky. Not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small. Three Arrows Capital demands 1.5 B increase in the FTX lawsuit. Fed's barking. Fed is making great progress, but needs to keep it going. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Yeah, I know. I keep talking over myself. I know. Not an easy thing to do for most people. But I have a clone. A freaking clone. Yeah, so anyways, good morning. How are you? Another interesting day. Another good day to be alive. And if you're alive and breathing, you might as well be trading. So we had our claims. We had our PPI. Yep. And tomorrow's going to be retail sales. Is retail sales important? Well, we could take a look. It's an easy thing to address. And the answer to that is yes. Well, tonight we have GDP out of Japan. That is important. Our historical analysis of the volatility created from this news event shows that there are reliable and repeatable patterns depending on the outcome of Japanese GDP. We know that to be historically true. We also know when GDP comes out for the UK, it also produces a reliable, repeatable pattern inside of all the volatility around the news event. So we also know that to be quantitatively true. And then tomorrow, during the US session, we're going to have retail sales. And we also know that that creates volatility. And we also know that it creates reliable, repeatable patterns. Okay? Now, if it comes out less than expected, it doesn't create a scalp. Isn't that interesting? If it's greater than expected, it does create a scalp. How interesting, huh? So you got to know these things, otherwise you're just trading blind. Whereas Michael Jackson would say, you're just ignorant. You're just ignorant. So anyways, we have a lot of cool data. Yeah. So there's a lot of news coming up in the next 24 hours. Has anybody been playing with the implied volatility? I showed you a couple of examples yesterday that worked out really well using implied vol. Right on. Yeah, very cool. Bitcoin. Sure. You're interested in Bitcoin now, huh? Not at 50, but at 90? Okay. So we already know that November is the best month out of the year. We've known that for a long time. We also know October is a good month. So we've known that. And this September is a dip. So all of that has been quite true. And then December is less good than November. Okay. Okay, there's your best case, base case, and worst case scenario. Well above our average. Our average is 83, but we're well above that with a positive slope and a linear projection in the future as high as 103, let's say, 102.5. Is that right, Adam? Crushed it? Yeah. Yeah, it's a really, really, really good tool, Adam. The implied volatility tool is really cool. Oh, yeah. Oh, yeah. Okay. But anyways, that's linear projection, right? This is a statistical analysis of the data set from when going back even before 70. So that's our best case scenario, 102,367 by the end of the week. Okay. But base, much more realistically, 95. Oh, sure, on hell. Right here. It's easy. I don't know if I have that kind of data, if I can go that far back, though. That's the issue. That's a lot of years. Oops. Okay. And then, of course, the next problem is this screws everything up, huh? But you have the data. Okay. But clearly, and this is the challenge when you have outliers in the data set, right? It just gets cray-cray. But we have the data. Okay. Okay. And of course, it's not traders' fault that we had negative 30% GDP. Yeah. But yeah, you can play with it. You can record it, write it down, get a sense for it. Or you can just gather that part first, right? 2016. Oops, let's go back. End date, change that to somewhere in 2019, right? Still can't get the date. Too bad. This is probably the dumbest way of doing it, but anyways. Still didn't do it, did it? Anyways, play with it. I don't think, because I did this 8 years, so it's doing 8 years and that, which is not the right way. So, you know, start January 2016. I guess that makes sense. This probably worked this time. I can't just change the year, huh? I'll try again. I know it's a little pain in the ass. Still won't do it. Anyways, I'm not doing it right. But yeah, it can be done. The answer is yeah, it can be done. That kind of bugs me why it's not. Anyways, yeah. Anyways, there you go. There you go. It can be done. So somebody asked about gold. They wanted to buy gold. Okay, you could buy gold. We could play around with that idea today if you wanted to. Now, having analyzed 7 different media sites and 79 mentions of gold, Traders.com sees a negative score, a negative sentiment in the market for gold. Okay? It's been positive most of the last 90 days. But as of about a week and a half ago, let's say around the election, since then it's gone negative. So for those gold bugs, you could read these 80 articles, or you could have just TRADARS do it for you. It's one way of looking at the market in general. Remember, it's not quantitative analysis. It's subjective, but it's reading the articles subjectively. And if the articles have negative outlooks or negative sentiment toward gold, we will be able to capture that. Okay? That's nice, isn't it? Yeah, it is nice. Now, if you look at the fundamental score, you can take a look here. And let's do this from the scatter plot. And we'll do commodities only. Okay? Gold on Traders.com has a score of -3. And today it's down 1%. As expected. See, bearish and expected. So the person that wanted to buy gold today, you're being a little bit, I don't know how to say. I was going to say speculative, but see, the derivative of speculation is the same as spectacles, like your glasses, which means you're able to see. You have some data and you're able to see sort of the truth, and you're able to, let's say, make an investment because you have an edge, because you can see something that other people don't see. I'm not sure what you see. So maybe it's technical, right? So we could then go to here. And what do you see technically? Well, this is statistical analysis. We have a bearish trend. Statistically, you can't argue it. It's easy math, right? Y equals mx plus b. Can't argue that, right? So, look, why are you buying it again? So to that person that said they were going to buy it today, why? Now maybe we can go to our charts and, oh, what happened to that? Well, they turned off on me. Glitch in the matrix, huh? So, why? So then we can go like here and try to figure out why that person wants to buy it. And, why? Well, okay. Bulls buy higher lows, right? And I don't see a higher low. So, unless I'm missing something, that's not speculation, that's gambling. Okay? It's not what you know, it's what you can prove. So you might say, well, I know gold's going up. Yeah, well, it's what you can prove. I can't prove it. Nobody seems to agree with that trade. Now, maybe that's the trade. It's the counter trend trade. Okay, I'm not a counter trend trader. Right. So that's that. You would probably need the dollar to get weak as well. And so we'd have to look for that. Well, I think this has more to do with the dollar than gold, Abdul. So people are playing the tariff trade. Okay. So this was yesterday's sell zone for oil, and now we're back up to today. On hell, it's to me, it's profit taking, maybe, but is that a pullback? Dude, it hasn't even made a higher high. We tested yesterday's low for a couple of minutes and dropped like a ton of bricks. So, yeah, you're looking for the next lower high. Okay. We're a long ways away from a higher high, higher low, or a higher high, double bottom, higher high, higher low. So I'm days away from that, right? Okay. Now, all right. Is this a double bottom on oil? Yeah, if you want. Head and shoulders? No. No. Double bottom? Yeah. Yeah, you could. Now, did you read the EIA report that came out, when was it, yesterday? Yeah? You read it, right? Where did it go? It's the monthly that came out yesterday, not weekly. No. I don't think it's the short term. I think it's the... Where'd they put the stupid thing? So funny, they change their site so often that I can never find anything. It's the monthly. Annual short-term energy. No, come on. We expect ongoing geopolitical risks and withdrawals from the global oil inventory stemming from OPEC plus production cuts will place upward pressure on oil prices over the next few months. No, that's not what I'm looking for. However, forecast for global oil production growth means inventories will begin building in the second quarter of 2025, reducing crude oil prices through the end of the year. So that's not what I wanted. There's a supply of 1 million. Oh, here it is. But this is the opposite. That's the opposite of what I'm looking for. That's consumption rising. Supply is supposed to rise 1 million barrels a day. So I'm getting the opposite of what I'm looking for. So anyways, if you're trading that, yeah, up would be fine. Oil inventories and prices. So anyways, I'll have to find it. I don't think it's the right report. I'm looking for the monthly report that I thought came out yesterday. But anyway, so I'll just tell you that it was expected that demand for oil, maybe it was IEA. Maybe it's the IEA. Maybe I got it mixed up today. IEA.gov. .org, I think. There we go. This is the one. Sorry, I got them mixed up. EIA and IEA. Yeah, it's easy to mix up, right? World demand is forecast to expand. Where does it say ebb and flows? Oil market participants refocused attention on fundamentals, including weak Chinese demand, the resumption of Libyan crude output, and planned unwinding of OPEC production cuts, all forecasting a well-supplied oil market in 2025. With only 6 weeks left in the year, global oil demand is on track to expand, which is good. Okay. But half as much as last year. Yeah. China's slowdown is the main drag on demand. Meanwhile, world oil supply is rising at a healthy clip. We continue to expect the United States to lead non-OPEC plus supply growth of 1.5 million barrels a day this year next, which is huge for the United States, along with higher output from Canada. Okay. Brazil is going to be in a a major source next year. Okay. So we have OPEC plus cuts. If they start producing again, that would probably also lower prices, right? Our current balances suggest that even if OPEC plus cuts remain in place, global supply exceeds demand by more than 1 million barrels a day next year. There you go. That's the line I was looking for. Okay? And it'd be worse if OPEC also increases their production. So anyways, yeah. So that's from yesterday. Would you like a link to the report? So the way that I teach, I preach to teach. Okay? What you want to do is start with the moving averages. Okay? Great. And they're bearish. Great. So I'm a bear. Done. Cool. So now what is my prime focus every day when I'm a bear? Yeah, can you define what an opportunity is? Well, selling high is not always the right thing to do, because I could sell high in an uptrend and that would be bad. Even if I was a bear, selling high in an uptrend would be bad. Denise has it, sell lower highs. Cool. So I could define that through daily ranges or through swings. Like a swing would be there, right? The previous high. Okay, cool. Now, obviously, a lower low would be great, but we are on support. In fact, we reversed on an annual pivot. So, like, we're not shocked, but it doesn't make it bullish. So a lower high could be as much as a 66% retracement and still be very bearish. And that's that. That's what I do all day. Okay, that's what I do all day. That's how the Wayne do. Well, it's more than a triple bottom, but okay. So a bull could buy that, yeah. But it's not a trend, it's a counter trend. Okay, Abdul? I mean, look, bears would likely buy there as well. The difference is, okay, they're already short, so they're offsetting, right? So, yeah. So it bounces. Now, if you want to buy from them, they're selling their short position, right? So if you want to buy from them, you could buy from them. But you are, a liquidity event. Okay, so you're betting that the downtrend is going to reverse. And in particular, on a day when one of the three major oil cartels in the world say that we're going to be oversupplied next year and lack of demand from China is going to contribute to lower prices over the next 12 months. Well, a little more than that, huh? Almost 18 months. Is it the world's greatest time to buy? No, it still might go up. Sure. But is that what you want to do? Does that sound right? And if the answer to you is yes, okay, then you do it. You know, it's your decision. But I'd rather either sell a lower high, and so we know the basics of that. The technical analysis is so easy, right? So somewhere in here, come on, won't grab it. There we go. Okay, somewhere in there we're going to sell, right? What if it makes a higher high? Then you'll take a small loss. But what's the probability? An object in motion tends to stay in motion, right? Now, we know we're on a key level support, but we've been talking about this for months. I mean, it's not even a new conversation. So you're either going to take it down lower or you're not. That's fine. Okay. Okay. But just make sure you know what you're doing. You should be able to write it down on a PowerPoint, have 3 or 4, logical reasons as to why you want to buy. It's not hard. Imagine, right, you had to explain every trade you had to make to a senior trader before, right? Before you could buy or sell. Okay? So imagine you work at a hedge fund. You just get hired and you're a junior trader. And you have a senior trader that actually will place the trades for you. So you're not allowed to touch the money. You get some charts. Great. And so you construct a trading thesis, both technical and fundamental. Doesn't have to be too complicated, but a very simple technical trade plan with fundamental rationale. And you give it to the senior trader first. And if the senior trader likes it, they place the trade on your behalf. If it's a weak idea, no. You send a lot of weak ideas, you're fired. Now, do you have that kind of rationale in your trades? Well, we have the tools now. So there's absolutely no reason for you to be guessing. There's no need, right? There's no amateur hour anymore. And we can look at some technicals if you want. What do you want to do first? Forex, crypto, stocks, commodities, or indices? Yeah, we can do indices. What do you guys want to do? La 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 la. All right, we'll do some indices. Okay, non-directional NASDAQ, non-directional S&P, SPX, right? Okay, looking a little further out, there's a dip on the open, but it's a rising trend. Let's go further back. More than maybe hourly is fine. Okay, rising wedge here. So hopefully you remember how I taught you to trade the last few days using implied volatility. Okay, I mean, let's do that again just quickly. I'm assuming you know how to trade market opens. I mean, we have a whole class on market opens. But are you guys a bull or a bear on the S&P 500? Okay. So bears had a sell zone of 5995, we'll call it, and 6007. Oh, we're still there. Okay. $5,995. Actually, that's the next one, isn't it? 6007. Oh, good. We almost got that one perfectly. 6007. And the next one was 5995. $5,995. Okay, so that was the sell zone. Come on. Based on implied volatility. Okay. Cool, right? That could get us down to 5942. $5,942. Cool. So that's what a bearish trade plan would look like for today. Of course, you had that quite a while ago. Cool, right? But that just gets us down to the 55 EMA. Okay? Which, of course, is pretty close to where the 21 will be in the future. Okay? And so we already have this marked out of a reasonable probability it happens. Now you can do the opposite, of course, if you're a bull. Okay, your buy zone is kind of where we are now and lower to 5962. Okay. So you can do the opposite, huh? So it's actually 59.59. Okay, 59.59 is the... Okay. Now, remember, it's implied volatility. It's okay. Now, you've had these numbers for a while. Okay. You see, I'm not making them up. They're here and here. Okay. And I got the data from here. 59.95, 6007. And it's not looking at the candlesticks. It's looking at the range the S&P 500 does on Thursdays. Okay. And so you can see there were two numbers for bears today. Okay. The first number was this, and the second number was this. And so now we don't know the outcome, but you knew the entries. And your stop was at like 60.42, which is quite a ways above, because these are not like necessarily 15-minute trades. But you can see, right? Now, if it's a range, one little trick you could do is say, well, the top of the range to the bottom of the range is basically here, right? And that gets us down to at least 159.42, maybe even a little lower, 59.33 or something, huh? Well, Chris, it depends on how much lowering taxes and other costs impact the tariffs. But which tariffs? We don't have any tariffs yet. And how big are the tariffs? And on whom? And how does that impact the flow of capital across international borders? But the basic, boring, standard operating procedure, kindergarten stuff, is tariffs create a strong dollar. That's why it's happened. So people are just positioning their portfolios to take advantage of the new fiscal policies. Well, TT, if Trump tariffs China by 60%, how does that impact Japan? Or does it impact Japan at all? A U.S. tariff on China? Yeah. Well, does Japan compete with China? Yeah. So it would seem that when you go and buy a TV and suddenly Chinese TVs are significantly more expensive than they used to be, you might decide to buy a Japanese TV. Now, in the United States, we don't have Chinese cars, so and BYD is definitely not going to come to the United States now, not with, Elon running the government, the richest guy in the world running the U.S. government. BYD ain't coming to America at least for 5 years, huh? So Tesla's got its little monopoly going on, but if there were Chinese cars and suddenly they were significantly more expensive than a Tesla, then maybe buy a Tesla. Or they're significantly more expensive than a Toyota, so then you buy a Toyota. Okay, it's a substitution. If there's a disease for apple trees and suddenly apples get very, very expensive because supply falls, and the price of apples double, you either pay double the price or you eat more pears. Yeah, Nissan's in trouble, I think. Okay, continuing to fall. Little test of the role reversal. Okay, you do want to watch the 5 EMA. It's still in play, although it's bending it, huh? 59.70, so it's still a little bit below us. And then you want to analyze where the 21 is going to be in the future. So I'll show you my little hack. Zero lag moving average, 21. I'll make it a fatty. Okay. And it's rising quickly. So what you want to think of is if we break the 5, it's going to fall down to the 21, which is this price, but it's moving every day up. and to the right. So every day it'll move a little higher and to the right. So if it takes 3 days, you got to go up to the right, up to the right, up to the right. Meanwhile, price is falling. So somewhere around where the 8 EMA is. Sorry, SMA. Well, that's why I have an 8, bro. But anyways. Good deal, bro. Good deal for you guys. Okay. Another way of doing it is just like, yeah, buy it down there. Yeah, smells good to me. Good deal, guys. No. Because this is all run through a Forex broker, we only have volume from our liquidity providers. So depending on the LPs, and so each broker would have something different. It's not the same as other, like if you actually had a stockbroker, that would give you volumes through the exchange. But yeah, these are all synthetic and all through LPs. So yeah, but you know, I think it would be generally accurate. I don't think it'd be disaccurate, inaccurate. But no. Okay. Okay. Remember, my target is 6,111 by the end of the year. So a little down and then some up. Okay. But technically, this has no problem coming down to this role reversal, which is already there. It's all right. But we are attacking this number here. We'll call it 5970. And that's the daily 5 EMA. It is buyable if you want to be a bull. There's still, right? It's still an opportunity. So again, 59.59, is that the right number? If you were going to be a bull, let's do that. If you want to be a bull. 59.59, which is just a bit below us. And then the other one is down near 62. No, that's the one we did, 59. 1 hour low. I'm reading this wrong. 59.52. Oh, and everything just updated. 59.52 is the new number. And the other one is 64. So I'll update it. It just updated. Pretty cool. It updates in real time every, right? So anyways, let's get this 59. Oh, wrong one. Sorry, I'm just slow at doing this for you guys. It's 59.64 now, 59.64. And the other one is 59.52. There you go. I just, to get the data spread around, I'm just slow. 59.52. 59.52. All right, so if you're a bull, that's where you want to look. Now, to buy or look for reversals. Now, the logic here is based on Thursdays, sort of midday Thursday. When it falls, that's the as far as it tends to fall. Now, of course, it could fall a bajillion, and you would lose money today. Okay, that's fine. But if you're a bull, you're trying to buy a higher low. In this case, you see what you end up buying as a bottom. Okay, and so if you're long-term long, this isn't acceptable. Now, if we were going to analyze this technically, now you're consolidating in range bound, right? Right? You're looking at it this way, right? Okay, great. So you buy it at the bottom of the range. Now, if it's range bound, but you're a long-term bull, then you believe it's going to go up to 6,111, like I said. Maybe even beyond, although I can't predict that quantitatively, but quantitatively 6111 is plausible. So you could do one of these things. And you should also know, if you do that, you're buying at the daily 5 EMA. And that is also acceptable. But of course, it's not steep, it's flat. But it's doable. Okay? Just don't make it up as you go. So if you were a bull, all you do all day is wait to buy low. If you're a bear, all you do all day is wait to sell high. And then all these tools tell you what is low and what is high. Okay? Well, I'm a permabull, Meta, because I manage money that is going to last hundreds of years. So I'm always a buyer. If the stock market drops 20%, I'm going to buy it. Yeah. Yeah. Right? Like when you look at the COT report, if you actually, you know what, why don't we just do it for fun? CFTC.gov, hang on. CFTC.gov, and we'll open up the Commitment of Traders report. We look at, guess we'll do that. Okay. All right. Rice. Corn. I guess we can do just corn. Let's see. Long. I was just looking for something more aggressive. I guess you could see like I don't know that that's not very extreme. Wheat, spring wheat, hard red. Okay, what I'm trying to show you is there are, maybe that was a good example on corn. When prices are falling, there are those that buy because it's falling. And so I was looking at corn here. Okay, 750,000 contracts short, significantly more short. And then you look at like managed money, they're 50-50. And these other reportables, they're long, not short. And then retail is kind of 50-50. So this market is set up quite different from this group here. And these are the ones that are actually producing it and hedging, or using it and buying. Right? Well, in this case, right, selling while these guys are buying. Yeah. So, which means there are those that will buy the stock market when it goes up, but there are also those that buy the stock market when it goes down. In fact, I think, you'd have to correct me if I'm wrong, but I believe the research shows if all you did was buy the stock market when it was down, let's say, a minimum of 20%, and then every time it drops more than 20%, like to 30, you buy some more. It drops 40, you buy some more. And then it starts going back up and you stop buying. Okay? If all you did was buy the dips over the last 50 years, you did well. And if you missed those dips because you rode it all the way to the bottom and got knocked out, and then you waited for a rebound and got back in after a rebound, you're basically flat. Okay, we're getting closer and closer to that buy zone. Remember, it's not going to be perfect. It's just quantitative analysis of rolling ranges for this particular asset. It's a measure of saying, okay, it's fallen, yep, but it's fallen a lot for what is normal. So I think we're at least 95% of that implied range, don't you think? So now you maybe would get ready and think about it. Here's that volume analysis on the 5-minute, huh? So quite a bit of time has happened since the open, and there are quite a few assets that are still good for trading, but quite a few of them may have already sort of flipped over to less good. Okay, these are now medium opportunities. Euro yen isn't the best time of day to be trading now. You missed that boat. So throughout the rest of the day, the range is going to be tight. Okay. Also, Tuesday was a good day. If you look at this, if you buy on Monday, the euro yen, you can run it till Thursday around 8 o'clock in the morning, New York time. So you buy it somewhere on Monday and you hold it till Thursday, New York open, and then you take profit. Or at least this is when the implied volatility is best. It keeps growing to Wednesday, and then by Thursday, the implied volatility, the range in which it moves, narrows. It moves less and less Thursday and even less on Friday. But when you're a bull, okay, when you're a bull, and I'm a bull on this, I'm not a bull on euro. I'm a bull on the yen pairs. So in general, I would expect this one to pull back further. But realize what the lines are saying. Now, oops. I'm going to have to start here to get it more accurate. Okay, these are the implied low now. A few hours ago, they were almost certainly wider because you can see the volatility a few hours ago was wider. So this would have been wider. Well, so what that is saying, and now I'm implying what the implied volatility is saying. If you'd been here a few hours ago, okay, 1, 2, 3, 4, 5 or 6 hours ago, so London open kind of thing, we were probably at the bottom of the implied range, okay? Which means if you're a bull on this asset, okay, it was a better time of day for trading, and I'm assuming this was listed as not a medium opportunity, but as a high opportunity. And the goal is this, and the stop, does anyone know where I put the stop? Where do I put the stop? Below the daily. Well, if you're a trend trader, yeah. Oh, is that right? Well, welcome. Make sure you subscribe, eh? So I hope you guys see the usefulness of these tools. It will not tell you the bias. I'm not even bullish on euro. But it helps address one of the biggest questions on this pair if you're bullish. And of course, traders.com helps you analyze whether you should be a bull or a bear. So we answer that question too. I just don't love euro right now. But yen's up, yeah, for sure. So looking at this tool, we know this is not the best time of day. Where were you 5 hours ago? The second thing is, okay, great. Right? We know basically London Open is the best time to set this trade up. And there seems to be two setups here. Asia Open, London Open. Okay, cool. So if you're a bull, oh, do you see it updating? Oh, it just updated. Okay. Yeah. Now you have, entry, stop. It's all there. Okay. If you forget, stop loss and take profit placement has often been a random choice based on little empirical data. The graph illustrates the expected price range movement for the selected instrument for the next 1 hour, 4 hours, and 24 hours. This information is calculated for specific times of the day and days of the week in order to provide the most accurate expected measure of volatility for the current market conditions. Okay? So if you trade with duration in mind, the next hour, 4 hour day, you can use the graph to help you set your exit levels appropriately. Okay? So now you have an idea based on implied vol where entries are and where exits are, but most importantly, we already know empirically you're watching the wrong asset. You've already lost focus. You are missing better opportunities based on historical trading opportunities. Do you understand the value of that? Okay, you should have been trading Bitcoin 5 hours ago. Yeah. And notice how extreme these moves are relative to the past. So you're like, man, these dailies are off. No. The market has changed because this goes back and looks at implied vol or calculates implied volatility going back many weeks. Okay. So what do we know about, bulls? Bulls don't believe it should go lower than that today. All right? Bears should be living up here. So what if you were a bear? Well, this is the one I already set up for you. Okay, I don't know if you're a bull or a bear. You have to make your decision, but this is sort of the likely outcome. And your stop would be placed right there. Because if it remains bearish, it's probably not going to make a higher high. Don't you think? I don't know, Timothy, did you click the thumbs up button? Okay, we could look at Dow. No diggity, no Dow. Okay. By the way, for those that are on my CIA group, I didn't mention it before by name, but I'll tell you, the CIA made an investment in the Dow this year. And we're approaching or have just approached our 1 year anniversary of managing that portfolio. Our investment on Dow is up 50%. We made 50% on the Dow this year. 50%. Total return. Capital gains plus income. 50% on the no diggity, no Dow, the boring Dow. Shut the back door. Oh my God. Dude, seriously. I'm not talking about Tesla stock or Nvidia stock. I'm talking about the Dow. Boring monopolies. 50% return for the year. Dude! Bravo, CIA. By the way, I need to get some more people on the CIA. I've neglected it for a little bit. So I want to come up with some ideas to include more people and some more ideas and share more. I always wanted about 25 people involved. I don't want it to be big, but I do want to share for those that want to learn how to construct portfolios. Dude, our portfolio is so ridiculously conservative that I actually want to make some recommendations to add more risk. We are so low risk that I think we're underexposed. I'd like to increase the Sharpe ratio a little bit because everything is too. Our beta is now lower than 0.1. Like it's so stupid. Oh my God. We need to add more risk. We've overdone it. But then when you look at it, you're like, wait, what do you mean? How could it be so low risk if you got a 50% return on the Dow? Yeah. Well, so anyways, we got some pretty interesting conversations. And the other ones are doing really well too. But not 50%, like 25 to 30, sure. 20 to 30, we'll say. Sure, but that Dow, he just freaking crushed it. But taking incredibly low risk. Yeah. So anyways, I would like some people to join the CIA with me, so I'll have to try to find time to address that. Does anyone here want to be a professional money manager, either managing a portfolio for clients or like me for charitable endowments? Manage your retirement account? Right? I might even start advising an ETF on how to do strategies like this. Yeah. Our dividend is 12% a year. And of course, that's the money that the charity should be running on, right? They can use that 12% and then find out their account has only grown by 10%. Plus, they put 12% in their pocket. I mean, but the idea is on the long run, that net asset value is going to go up and down and up and down, up and down. Can't do anything about that. That's how capitalism works. But that endowment needs the 12% income, right? So, like, for example, let's say you retired and you had $1 million in your portfolio. You'd be making about 10 grand a month. And when you die, years and years later, you've been earning $10,000 a month for years and years and years. And then when you die, you have to decide what to do with your $1 million because you still have it. Does it go to your ungrateful children and grandchildren, or does it go to charity, or do you leave it to your dog? But you see, right? The goal is you should save enough money over your lifetime that by the time you retire with a program like mine, you're earning maybe just as much, maybe even more money than you did in your lousy job, your no good, lousy, dirty dog job. And you live the next 30 years doing nothing, earning that income. Wouldn't that be sweet? It depends on how much you save. Now, you might have chosen to buy a TV that's too large and a car that's too fast and vacations that are too long, and you shrivel up those savings. Well, negative consequence. Imagine when you retire, you have a 30-year vacation. That's when you want to be rich. But anyway, so nobody responded, so nobody cares about this stuff. All right, okay. I'll move on.com. But notice we hit the 1 hour implied low. So there's that range. Again, the numbers are here, right? Between 43,833 and 43,738, which is this area here. If you were a bull on the no diggity, no Dow, then you get all hot and bothered when we get in this area. It's good, right? Not a lot of action going on, though. Look at this. Basically no scalps right now. Anywhere. Well, anywhere Forex. But that's crazy, huh? NASDAQ kicking off resistance. Okay. This is why I don't trade these types of trades. I let them break out, then pull back, and then buy. So that didn't work for them. That's fine. This one did work. Did it pull back is the question, though. Not really. Nothing that great. Triangle is non-directional. Cool. Well, it's gone quiet. I guess I burned you out. Everyone's gone cold. So I guess we'll wrap it up. Do you want me to leave the news running? By the way, look at the buy zone. Look at the implied volatility buy zone. Shut the back door. Now, we also know that that's the daily 5 EMA. Okay? Dude, come on. Give me some street love for that. Huh? Come on. Give Papa Bear a big hug. Quantitatively, can figure out what does it mean buy low. We also quantitatively figured out what it means to sell high. And we know the sellers did sell high at precisely the right prices. And now the buyers are buying at precisely the right prices, and amateurs are stuck in the middle somewhere, right? Yeah. I don't know. Maybe my page is frozen or something, but no one's typed anything in the chat. Let me refresh. Oh, yeah, there we go. Sorry. See, for some reason, the chat wasn't updating. Okay, there you go. Yeah. So, if you are, Reginald, this is, if you're a bull, this is what it means to buy low. And I already did the bearish one, and this price and that price, before it even got to those prices, were considered what is sell high. So for those that are interested in learning how to be professional money managers, my program is a year long minimum. And I think you start with like a 10 hour, I don't know how long it is, 10-hour training course, and then monthly meetings. And we manage my real money. I have a real account. It's an institutional account. It's in a major Wall Street firm. And we manage it as a team. And we have very long, sometimes long, very detailed conversations. We have an amazing analytical approach. If we change this, if we change that, if we change this percentage, what does it do to income? If we change that percentage, what does it do to that? We rebalance, we reallocate, I put money in every month. So like when we meet, we can discuss what to buy, what to sell. So like with that Dow position, at one point we had more money in there and we sold some of it and made a profit. But meanwhile, the rest of the money is up 10%. So that is a capital gain, right? Plus the realized gain, plus the income, we're up 50%. dude, right? So anyway, so we have these detailed conversations, and then when we decide, we vote, okay, we're going to move money, we're going to sell some of this and move that money over here. We have some cash, we're going to move the money over there. And we all agree, great. So then I open up the actual account and I literally go through the buy order. And people see me triple checking everything. All right, we are selling, 180 shares of this, and it's going to be here, and we're going to do it at market, and we're going to go to this, and then we do it, and then it shows the available cash goes up. And then we're like, okay, so we're going to now buy this other thing. Everyone agree? Yes. So then we go through, and then I pull that asset up, and all right, let's triple check it. We are buying 372 shares of such and such at $27.52 per share. The order's going in as a buy at market, right? Triple check. You hit next. There's a confirmation. Everybody agree? Anyone see a mistake? No, right? Boom. Order submitted. Shares purchased. We check in the allocation and it's in the portfolio. I do everything in front of people. Yeah. So if you're interested, Wayne, which one should I do? Wayne at fxbootcamp.com. Of course, it costs money, right? And if you quit, you can never come back. But for those that want to do this as a career, manage other people's money, yeah. Okay? Like I said, once a month we get together. Usually on the small meetings, we don't actually buy or sell anything, although we can. We usually wait for the Fed meetings and then we allocate then. But we could rebalance and allocate whenever we want. In fact, I want to reduce some bond holdings and increase some stock holdings. So I want to discuss that. So in that and there's some cash. I can't remember. There's like 3,000 in cash. That is waiting to be allocated. Plus, I probably want to move another, $5,000 from one investment to another. So I might bump, I'd like to propose at least and discuss, how much and where to allocate, $8,000 or something. I wanted to do it before the election, but I've just been too busy. It's insane. How could I be too busy for that? It costs me money, obviously, because yields have gone up and the stock market has gone up, right? So I would have been better off. So not having time has cost me a lot of money. But, dude, that's all there is, right? Time and money. So one of my thoughts is that I redo the stock trading course and add to it. So really it's a portfolio construction and management course. And so redo it, because I did that a couple of years ago. And so teach that and then see if anyone is interested in actually doing what I teach with my money. And what I do and teach in the CIA is precisely what I do for the charitable endowments that I manage. It's precisely the same. Yeah. But the problem is it's been very, very successful and crazy low risk. So in the next year, I'd like to try to add a little more risk. Who would have thought about that? I was talking to a hedge fund manager, 2 or 3 days ago, I guess. And I was telling him, I'm like, dude, I need to add risk. how much does that cost? Like, what should I budget if I was going to add some leverage to this? And he was chuckling. He's like, dude, that's such a funny problem to have. Like, nobody discusses being under risk. I'm like, but I am. I'm, I'm earning 20% a year and I'm underexposed, right? I'm like, I need to bump this up. And so I was trying to get some feedback, and he just thought it was really funny. He's like, dude, nobody talks this way. And I'm like, I know. But the portfolio can do it. That's the thing. And under risk, right? Underexposed is the thing. Like, it could do slightly better, and we're trying to optimize the portfolio, the performance. So finding a way to add a little and bump up the Sharpe and keep the income high without sacrificing too much in scenarios which could be negative, like adverse periods of time. Does anyone know how to analyze how your successful portfolio will do during bad periods of time? Does anybody know? If you were going to analyze the performance of a portfolio for risk. See, I do it all the time. I did that for the charities. The first thing I did was an audit of their performance. And I'm like, this portfolio that your big fancy pants Wall Street firm created for you is crap. What kind of risk-adjusted performance analysis do you do? Okay, see, now I'm refreshing my page and it's still people aren't answering. So I think I've gone off track again. But it is your Sortino ratio. So if you use beta as vol, my beta is crazy low. Our Sortino ratio is crazy high. Like, it's very, 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 very good. But we could add some risk and raise the beta a little bit, lower the Sortino a little bit, increase the Sharpe a little bit, and increase the performance, and it should be all right. It still would be low risk. But instead of like 20% a year, maybe I can do 30 or 28 or 25. 25, right? If I could do that, that would be great, especially if I can maintain a 10 to 12% income level, because then the story changes where, the little old lady retires with $1 million, lives on, let's say, if not 10, let's say $8,000 a month the rest of her life. But when she dies, it's not that her $1 million of life savings is still there. It's 1.3 million. It continued to grow over the next 30 years, not by a lot, but it continued to grow faster than inflation. Meanwhile, she lived on $8,000 a month for decades. That's my vision. So if I can do that, if I can contribute to that and, optimize the performance and actually take on a little more risk, that might be interesting. So that's our challenge for the CIA this year. How do we stay low risk, low vol, and provide high income and increase our Sharpe? It's going to be an even more exciting year for the Council of Investment Advisors. So again, I can't see people responding, so I don't know if it's Google or YouTube or not, but whatever. I'll leave it to you. I hope you enjoy what we've done. I hope you see how powerful the tools are at traders.com. I hope you become a member of our community and subscribe. We have a lecture coming up in a little bit. in our performance coaching section. Okay. So in about a half an hour, Brian's going to be talking everything crypto. Then Jessica's coming in and talking about momentum. And then at 4, I'm coming back and doing our technical trade planning for next week. Okay. Yeah, literally we get together and plan out next week. Okay. So that's just today. So we're talking about 5 or 6 hours of performance coaching a day, plus all these amazing tools that cover both fundamentals, technicals, and vol. Okay. So cool beans, amazing stuff. I hope you love it. And then before we go, let's just check one more time to see if the underlying intrinsic trend has changed from neutral. Okay, this is something that you should check up on throughout the day, and it's about the same. No underlying intrinsic trend. Slightly long-term bullish. But when you look at the options market, the dollar market, the stock market, the yen market, long-term treasury market, gold, volatility, short-term treasuries, there's really no underlying intrinsic trend going on right now. So, be careful. Be careful out there, huh? Peace on earth. May the pips be with you. May your profits be above average. Thank you to TradersWay.com for an awesome platform and trading execution. Okay, you need trading execution, but then you need, you need good tools to make logical decisions. Now you got the whole kit and caboodle. So peace on earth. May the pips be with you. May your profits be above average. Have a wonderful trading day. And I'll see you tomorrow at FX Street. Do you guys have the link for that? Hello? Yeah, I got it for you. This is the FX Street YouTube channel. And I'll post it here. Cool. Yeah, and it's not 6:30 Eastern time, it's 7:30 Eastern time. So, are we good? Okay, peace on earth. May the pips be with you. May our profits be above average. Cheers.